Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon.
Good afternoon, Devin.
Well, the Blue House has announced in detail its plan for the Korean New Deal, 160 trillion won about to be spent over the next 5 years on these projects. Tell us about the New Deal and how concerned we ought to be about this spending.
On Tuesday, President Moon unveiled details of his 6-year Korean New Deal project worth 160 trillion won that will help create 1.9 million jobs. According to government, this project will transform nation's manufacturing and fossil fuel reliant economy into the fourth wave industrial revolution oriented and eco-friendly one. But as of now, this plan lacks substantiation in how to finance 160 trillion won, how to relax dense regulations for promoting these industries, and how to mitigating conflicts of interest between different groups.
Indeed, a lot of question marks to be answered over the next few years, but we also see the Bank of Korea keeping interest rates where they are for now after its policy meeting today, though. It also said the economy this year might shrink more than its most recent forecast. Tell us about that decision to keep rates steady.
As widely expected, Bank of Korea's Monetary Policy Committee kept the policy rate frozen at 0.5% unanimously. There were already 2 rate cuts this year so far. In March and May, Bank of Korea slashed its policy interest rate down to 0.75% in March and then 0.5% in May, respectively. It looks that Bank of Korea will assess the impact of previous 2 rate cuts and then decide what to do on key policy interest rates.
Now, the Fed has also put out a fairly gloomy outlook for the U.S. economy. Economic activity is up almost everywhere, but nowhere near the levels seen before the pandemic. What do you make of this Beige Book report and how it might affect monetary policy?
U.S. Fed's Beige Book, which represents U.S. Fed's official understanding on economic situation, said that economic activity is increasing, but remained well below levels seen before the pandemic. Also, a major part of employers still lay off workers because of the pandemic. Therefore, it is highly expected that U.S. Fed will continue its aggressive and expansionary monetary policy by the end of this year.
Well, overnight, that report didn't seem to bother investors. Stocks on Wall Street and Europe strongly higher on hopes for a vaccine. What's the story in the global markets?
In yesterday's market, U.S. and European stocks both gained between 1% to 2% in a single day. The rise is mostly due to close coronavirus vaccine development by U.S. pharmaceutical company Moderna and U.S. government's $1 trillion additional physical stimulus. I think this kind of stimulus effect will be continued for a while.
And then yesterday we saw the Kospi here in Korea climb back above the 2,200-point mark, but this morning the index suddenly took a dive after the BOK's report on growth being lower this year. Tell us about the local market.
There were 1% level ups and downs for returns of daily returns for almost a month. I think domestic stock market is undergoing a correction period after rapid increase for the last 3 months. Today, domestic market cooled down with negative 0.8% in both Kospi and Kosdaq markets. There were massive selling from domestic institutional investors and foreign investors. On the other side, domestic small individual investors bought that huge amount of the stock.
Got it. All right, Professor Kim, we'll have to leave it there for today. Thanks so much for sharing your insights.
Thank you very much.